Glad to be back. So we're waiting for one more speaker, Amir, who's in the back. So while we're waiting for Amir, I want to thank you again for staying. This is going to be the most exciting panels of the day. And so I saw that there are entrepreneurs in the room. So if you're an early startup and you're looking for your first sort of institutional, first large for an early startup funding, this panel is for you. And but before you pitch those guys and ask them for their money, I just want to give you two advice that could actually change your life. Advice number one, you have to know what they're doing. Don't pitch them before knowing the name of their company, and the type of investment they're doing, right? Amir is not going to invest in a clean tech company or avionics. I mean, I'm not sure. Maybe drones, but because I meet venture capitalists all the time. You know, I'm in San Francisco. I meet them in conferences. I interview them. I even meet them at Starbucks. And the number one thing they hate is when somebody is pitching them something they don't want to hear about or they're not interested in. Because, you know, time is money. And for these guys, you know, they're investors. It's a lot of money. So you have to know who they are. Second advice, keep it short. All right? 5 things. Who you are, what you do. What's the opportunity of your idea, of your product, of your service? The opportunity, the market. It's huge. Okay. Because if it's small, they're not interested. I'm going to ask you, introduce your firm, you know, what you do there, what are the areas you're investing in. Also, what's sort of the ticket, how much you're going to invest, and what are you expecting from those startups? What level of maturity are you expecting? And how much you invest. So, Manny.
Hello, everyone. Can you hear me okay? Yes. All right. Raise your hand. How many entrepreneurs do we have in the room? All right. Terrific. My name is Manny Fernandez from SF Angel Group. We primarily invest in early stage startups in San Francisco. That's one of our funds. We have several funds, and we're out here looking for opportunities as well. The dollar checks really is based on perhaps what traction one has. We cut checks as little as $25,000 if it's just an idea and we're watching you carefully to see what you do with it. And we cut bigger checks if you have more traction.
Tell us more about who you are, your fund, type of investment that you do, size.
Okay, thank you. My name is Mike Miller. I'm with Maverick Angels. We're based in the Los Angeles area. We don't have a fund. Our angel investors make their own investment decisions. They do syndicate from time to time with each other and with other angel groups in the United States. We typically invest individually anywhere between $25,000 and $750,000 individually, and then we'll syndicate with others. We do take an entrepreneurial approach to investing, where we look at resources beyond capital, what's already been talked about here already. The management team, a strong management team is extremely important because they're the ones we're entrusting the money to grow it and add value.
Talk about Tickless Angels now, which is also a group of angel investors. We're actually the largest angel investor group in the US, about 310 angels, organized in 5 different chapters from Santa Barbara, Los Angeles, Inland Empire, Orange County, and San Diego. And same model, like Mike described, individual angels invest their own money into deals. One advantage, not a competitive advantage, but one differentiation that we have is that we allow each network to bring on their own deals. And then if that deal is interesting to one network, then we can, before we syndicate out with other angel groups, within the whole 5 chapters, we can somehow start syndicating and passing on the deal. So there's a shortcut for entrepreneurs from that perspective. We're notorious to be slow, which is true, simply because our investors are looking at very precise execution models. They don't have any patience for exploration or testing or pivoting. So from that perspective, when a business is stable or the product customer equation is finalized, it's very easy to raise money from Tecos Angels. We do have a side fund which invests between $200K to $500,000 once a few of our angels have already invested. So that's how we operate, and we were, up to last year, we're exclusively focused on Southern California. Since this year, we have opened to the whole US. So we try to syndicate more. We've done a number of joint operations with Maverick Angels. We try to actually collaborate because there is simply no competition. We're just different investment club, that's it.
What areas? Software?
And we invest in all areas, from clean tech to healthcare to transportation to manufacturing. The average investment is about, I would say, $400K. We've gone up to $3 million. The largest I think we've ever done was $10 million on one deal, over 3 tranches. But usually the tickets are less than $500,000 as a first investment, right? Then on add-on we can do more. And it takes about 2-3 months to get funded.
Okay. So Aniq, you're a little bit special in this group because you're sort of president of Moat and as well as an investor. So tell us a little bit, how do you handle both?
Yeah, it's a tough question. Can you guys hear me all right? My partners in Moat previously started a company called Right Media, which was acquired by Yahoo in 2007, and it was a fairly large exit. Yahoo acquired it for $850 million. And so,
congratulations.
Yeah. And so the proceeds from that allowed us to basically start investing in startups fairly aggressively. So over the last couple of years, we've put over $20 million worth of capital to work across over 50, 60 companies at this point. And so it's sort of a fun hobby, if you will. It's not our full-time focus. Day-to-day, we are running a company, and we've got over 40 employees now, and it's an online advertising SaaS company. So it gives us a lot of visibility into the online advertising market, and then also into other B2B enterprise SaaS companies. And so that's been our primary investment focus, in figuring out ways that we can apply our operating experience into other companies and help them that way. Some of those companies end up becoming partners of ours. Some of them end up becoming potential customers of ours as well. But we are sort of stage agnostic and industry agnostic in a lot of ways as well.